Namaste, good evening. Session 4 is concentration of assessment of companies. Um, actually, okay. End of the class la உனக்கு நான் clarify பண்ணிடுறேன். I need to go into the question and check. End of the class la I will clarify it. Yeah, sure. Thank you. I'll do that. Right?
ஹலோ
Yeah.
சார் எனக்கு நேத்து அந்த டவுட் சார் நான் கேட்கல இப்பதான் கேட்கறேன் இந்த பிஜிபிபில சார் for question number 8 which we solved in that HF forging case questionல வந்து they have given that under the newly formed scheme for training employees னு கொடுத்திருக்காங்க சார் அப்போ shouldn't we take that as
Yeah,
like
I will.
நம்ம அதை வந்து add back பண்ணலாம்
I think somebody else texted me that doubt. I clarified it. I again, okay, to be more clear, if the director's son is the first beneficiary or the only beneficiary, okay, because if you frame a scheme after the director's son joining and you are henceforth I will continue is not the entire aspect. There should be a precedence அப்படின்றாங்க அந்த கேஸ்ல that you should have already done it. So if director's son is the first beneficiary also you might not get it. You should have, okay, along with director's son there are 3 or 4 other beneficiaries, fine with it.
okay sir okay.
Okay. Right, friends? So now our focus for the evening is going to be assessment of companies. Okay. Okay. And I understand that you need also a dinner break. It will be somewhere between 8 and 8:15 so that you can inform your parents or family members that I don't exactly say 8 to 15. It will be somewhere around for 15 minutes. I'll definitely give you. Okay. Assessment of companies. Okay. Three things which we are going to do. A quick summarization of the provisions of us companies, okay, exclusively which are applicable to companies. Second thing which we are going to do is some case laws which I want to discuss in the classroom and the amendments which take place. Okay, a quick summary of the provisions of assessment of companies. Okay, is going like this. Okay, so regarding residential status in international taxation, I will deal with it. Okay, in PGBP chapter, we have something for manufacturing companies. We all know how it will pop up now. Okay, it is additional depreciation, investment allowance under section 32 AD if it is located in the, okay, these two are even available for non companies. It is for all, but these two, weighted deduction for in-house research and weighted deduction for skill development, these are exclusively for manufacturing companies. So 150%, 150%. Here it will be 15% of asset purchased and put to use. Here 20%, 10%, or even 35 and 17.5. Amortization, preliminary expenses, though it is not just for companies, but majorly in a company question, it might come in 5 equal installment. Amalgamation demerger expenses. And one other thing for companies to remember is capital expenditure on promotion of family planning. Okay, this is only exclusively for a company. It is exclusively for a company. So capital expenditure on it will be allowed in 5 equal installments. Revenue expenditure will be completely allowed. When I go to the special provision as regards capital gain, the followings are not regarded as transfer. distribution of asset to its members on liquidation, amalgamation demerger, conversion of a company into LLP, conversion of a firm into a company. In all these cases, it will not be regarded as transfer. Here, this morning itself, we saw the condition. Here, we saw the condition. Amalgamation demerger, okay, all as a merger or conditions ஞாபகம் வச்சுங்க, the same conditions. This, it is taxable for the shareholder. It is only exempt for the company. It is taxable for the shareholder. With regard to dividend, there is a section called 115 BBD, dividend from SFC, specified foreign company. Specified foreign company is one where I hold 26%, where the Indian company holds 26% or more of the voting right. Any dividend received from SFC is taxable at 15%. It's a concessional rate. Whenever there is a concession, other things are stripped off. So expenses will not be allowed as deduction. Expenses will not be allowed as deduction. Then come 115 BBDA. This is not applicable for domestic companies. Let us forget it. Okay, 115O. 115O, dividend distribution tax. Okay, the company which is paying the dividend can adjust the dividend received from subsidiary company. Any dividend received from its subsidiary company can be reduced. The wording is subsidiary company. It can be domestic or foreign subsidiary. Okay, it can be reduced on, and the balance you can claim dividend distribution tax. Dividend distribution tax has to be grossed up, divided by 85 into 15. No expenditure or credits will be allowed. Pay it within 14 days. As I was telling from the morning, this is the last examination where DTT is applicable. Unless it is brought back into the act, you are the last level of students who will be writing 115O. Okay, deemed dividend, I don't expect a question this time. It is taxable in the hands of the company. It is taxable in the hands of the company. Okay, any loan or advance given by a closely held company, okay, to a substantial interest holder is known as a deemed dividend, or the firm in which such substantial interest holder is a partner is known as deemed dividend, and it is taxable at 30%. It is taxable at 30%. Be it deemed dividend, be it 115O, and be it 115Q. In all these cases, rate of surcharge is going to be 12%, irrespective of the fact whether the company is paying tax or not. Leave alone whether the company is going to pay surcharge. Irrespective of whether the company is paying tax or not, on these quantums, we need to pay surcharge at the rate of 12%. Disproportionate premium, okay, whatever is in excess of fair market value, such excess will be taxable. It should be issued at a premium, and the issue price is more than the fair market value computed on net worth basis or discounted cash flow basis, and such excess will be treated as income in the hands. It is a section 56 provision. Okay, it is section 56 provision. Then comes section 79, hold it, I will come back to it. Section 179, special liability in case of liquidation. All the directors at the time of liquidation are jointly and severally due towards any tax liability. Even if you are not a director, if you are a substantial interest holder, they are also liable under this provision. They are also liable under this provision. I am now looking into 115 QA. This is as well as an amendment. This is as well as an amendment. Buyback of shares. Additional income tax is liable to be paid by companies which is buying back and not the shareholders. Okay, company, when they issue dividend, they have to pay DTT, and the person receiving has to pay 30% tax if it is more than 10 lakhs. So they found a new route. Buy back the shares and pay. Company is not going to pay, and only the recipient is paying on capital gains. That provision is stripped off. Originally, this was stripped off for unlisted company shareholders. However, from 5/7/2009, it is also applicable for listed companies. It is also available now for listed companies from 5/7/2019. From 5/7/2019, this is available also for listed companies. Additional income tax is liable to be paid by the company when it is buying back. For the individual, for the shareholder, it is exempt. Okay, listed company also clarified by the CBDT. Oh, this point I have written here itself. I'll again. Okay, if the buyback is initiated before 5th July and completed after 5th July, then the member is only taxable, not the company. Okay, this provision comes into effect for all buyback initiated after on or after 5/7/19. This provision is for all buybacks initiated after 5/7/19, where a buyback is already initiated, but only the process is completed on or after 5/7/19. Company need not pay the tax, only the individual, only the shareholder need to pay tax. Additional taxes 20 plus 12% plus 4%, 23.296, and there is a way of computing what is the issue price, difference between issue price and buyback price. Okay, there is a way of computing. Okay, in the case of face value direct issue. Okay, in the case of, in the case of direct issue, sorry, it's face value plus premium. In the case of bonus issue, it is nil. In the case of shares issued for consideration other than cash, FMB on the date of FMB of the consideration divided by number of shares. ESOP, FMB on the date of exercising the option. FMB on the days of exercising the option. Amalgamation or demerger, on conversion. Net asset divided by number of shares allotted, demerger. The same formula this morning as we discussed. So buyback might be a question because of the amendment. Buyback might be a question because of the amendment, my dear friends.
Sir,
Listening?
can you add the sheet in the Excel file and the provision sheet மட்டும்?
Consolidation, கண்டிப்பா பண்ணிடலாம். Yeah, sure, I can do that. You want for firm also?
Sure, sir. Company mainly.
Yeah, sure. Okay, இதுதான் amendment. Provision applicable from 5th July 2019. Provision applicable from 5th July 2019. Buyback in the case of unlisted shares were taxable in the hands of the company and not in the hands of the shareholders. But listed share companies, it was with the shareholder. From 5th July 2019, the provision is amended to include buyback by listed companies as well. So in the case of listed companies also, the additional income tax of 20 plus 12 plus 4% is payable on the buyback. Consequently, section 1034 was amended. An exemption from buyback of taxation is extended to the shareholder. So this is an amendment. One of the clarification given by the CBDT, is that is if the buyback is initiated, before, okay, if the buyback is initiated before and completed after 5th July, then only the members are taxable and not the company. Okay, so this is one important thing to understand. Okay, 115 BBF on royalty, to a larger extent it is not only for companies. Okay, இங்க நம்ம 115 JB க்கு யூஸ்ஃபுல்லா இருக்கும்னு போட்டது. Available for all assessees. Patent should be developed. Developed na 75% of the expenditure for developing the patent should be incurred in India. Income from such patent is taxable at 10%. Expenditure or deduction cannot be claimed against such income. About foreign companies, I'll come to it. So, So I have added and I will put it in the group. So this is the consolidated provisions which are available for companies. Okay, so various areas in the law. Okay, how these things operate. Now let us look into let us look into first the amendment which I want to speak about. 115 QA, a questionable amendment. A questionable amendment, at least in the 1 mark there can be a question. Okay, right? I want to talk about this amendment in section 79. I want to talk about என்னை பொறுத்த வரைக்கும் இந்த amendment is not very dynamic. I will tell you why also, but generally I want to speak about this amendment. Under the existing provision, a closely held company can carry forward and set off loss if at least 51% of the beneficial ownership remains with the same person in the year of incurring losses and in the year of set off. However, for eligible startup, the conditions are different. இதுக்கு வந்து 80IAC ஒரு section. Section 80IAC, where the eligible tax companies were given a concessional rate. And the section, when all companies were taxable at 30%, you providing a concession to this eligible startup was a dynamic section. When the law itself was amended, to make companies whose turnover in 17-18 does not exceed 400 crores, the tax rate being 25%, now there is no concession. All startups. So the concession which they had is no more. Furthermore, by adding 115 BAA and BAB, this 80IAC can be removed. Just because we have said 5 years, we are maintaining it, but it can be removed. Okay, because you have better concession. That's why it is not a dynamic section. We have not discussed much. It is there in the material, but I haven't discussed much, or anywhere you will not see this section much because the present rates are friendly. Anyhow, however, for eligible startup, the conditions are different. All the shareholder, 100% should be the same person, both in the year of loss and year of. Now they want to align it. The law is amended to pass on the benefit to eligible startup as well. In case of eligible startup, which is closely held, the brought forward loss can be carried forward and set off if at least 51% of the voting power on the following 2 days remains the same. On the last day of the previous year in which loss was incurred, on the last day of the previous year in which the loss is proposed to be set off. So this is a benefit which is provided. R 100% ஒன்னு கொடுத்திருக்காங்க. எப்படி 51% 100% இருக்கு. Okay, anyhow, this is a benefit provided for 80IAC, that is startup companies. Okay, again, if at all there is a question, it is a 1-mark question. It is not going to be a 5-mark or otherwise question. Okay, here again there is in the 6th section 79, I told you the 51% should be held. அதுல ஒரு சில exception இருக்கு. Shares are gifted, shares due to death of a person, it transfers, will, amalgamation or company or shares in your company, then you cannot say because that company has, like that there are some exceptions. 2 more exceptions are added. These 2 are added in some other place also where you can now link and see. The section already provides for a few exception for the rule of 51% to be held by the same person. And an amendment has been made to add the following to the list of exception. NCLT, on a petition moved by central government under section 241 of the Companies Act, has suspended the board of directors of such company and has appointed new directors who are nominated by the central government. In that case also, they can carry forward. A change in the shareholding of such company or its subsidiaries and the subsidiary of such subsidiary has taken place in pursuant of a resolution plan approved by the NCLT under section 242 of the Companies Act. The same has been incorporated in section 115JB. in section 115 JB, where it is incorporated, normally brought forward loss or unabsorbed depreciation, whichever is less in the books of accounts. However, in the case of companies whose application is pending with for under IBC, okay, it is going to be brought forward loss and unabsorbed depreciation. It is going to be brought forward loss and unabsorbed depreciation. Okay. However, Inga, okay, the same thing has been added. Okay. There is an extension of already provided benefit, that is loss and the aggregate of business loss and unabsorbed depreciation will be allowed is reduction if the company or its subsidiary of the subsidiary or the board is suspended by NCLT and the new directors are appointed. In this case also, business loss and unabsorbed depreciation. So it's a together amendment both in section 79 and in section 115 JB. Both in section 79 and 115 JB. Again, not a very dynamic thing, but examination questions can come. Okay, in that case, you need to answer that. So this is an amendment. Okay. Section 79 has two amendments, one for eligible startups, one for exception rule of 51. Exception rule of 51, you can remember it along with the 115 JB amendment also. Now, when I look into one other amendment which is very interesting, is section 219 AA, the first amendment of this year. It happened in section 219 AA. Okay, that is we all know about merger. Assets and liabilities should be taken. Okay, assets and liabilities should be taken at book values. Anna, I understand after reading this amendment. I understand. I don't know. Okay, any doubt you can ask Manasa. Okay, I don't know that according to Ind AS provisions, if there is a demerger, then they have to be on the fair value basis. So the amendment, book value, but now they are given the amendment. The benefit of demerger, that is transaction not regarded as transfer, is applicable only if assets and liabilities are recorded by the resultant company at book values prevailing in the transferor company. One of the requirements of Ind AS that the resultant company should record the assets and liabilities at fair value at the time of demerger. To accommodate this Ind AS provision, section 219 AA is amended to provide that recording of values other than book values will also be considered, provided the recording is as per Ind AS compliance. If you remember, one of the adjustment in MAT format 115 JB2 is that fair value arising due to demerger will be added or reduced to the book profit. That we know that second 2 subsection 2B. Okay. Having said this, I have an opinion on this. As a friend, I am sharing that opinion. Assets and liabilities are to be recorded at book value under the books of accounts. Okay, book under the income tax. Okay, that statement, again, our assets and liabilities can never be at any other fair value or other thing. It can only be at book values. Okay, somewhere in interpret pannirpaanga in the book value. I think the intention of lawmakers should be, when we say of book value, we mean a book value of the transferor company. We ignore the balance sheet values. We ignore the balance sheet values. When have we considered that as a value? We have a methodology of depreciation. So, naam mean pandrom. So, section should have also meant that. Okay, but some interpretation would have gone into, so they have added this. Okay, so the 219 AA, okay, is adjusted for fair values. Okay, so this is one other amendment. 50C spoken, 50CA spoken, 111, 112A. I'll come to this. Okay, set of spoken. Okay, 80 individuals. I'll speak about it. Assessment of companies, amendments, and one for alternative investment fund, which we saw in the morning. Okay, TDS amendments we will see tomorrow. Okay, so these are all the amendments which you have to know with regard to the provision, and then come to the consolidated case laws of assessment of companies. Last சொல்லலாம்னு நினைச்சேன், ஃபர்ஸ்டே சொல்லிடுறேன் இந்த கேஸ் லா. ஓகே, இது வந்து ஒரு கான்ட்ராடிக்டரி கேஸ் லா. மெட்டல் and chromium platers private limited. ஒரிஜினலா நான் படிச்ச போது I understood it different. Then I understood it and then I read it again and understood it. Assessee is eligible to claim section 54 EC exemption against LTCG which is credited in P&L. Can this exemption be allowed while computing 115 JB profit? We all know 115 JB is a format. Okay, we all know 115 JB is format. Okay, there are two other case laws where it has been held. Okay, is a fixed format. Inclusion or exclusion to that format cannot be made. Accordingly, the amount credited will become taxable at MAT rate and no exemption can be claimed. Okay, and the 115 JB க்கு கீழ ஒரு words இருக்கு. Okay, please understand. Under that provision, after the format has been referred, all other provisions of the income tax law will apply. All other provisions of the income tax law will apply. So, what Madras High Court said is, this is a provision which is away from 115 JB. 115 JB, there is no expressly said 54 EC cannot be claimed. 54 EC is not there, so we don't claim. Held by Madras High Court that capital gains which forms part of the net profit in the statement of P&L of the Asst company in respect of which exemption is available while computing under the regular portion should not be taken. Now should also be given as deduction while computing minimum alternative tax. Madras High Court has given a decision in metal and chromium platers private limited. இதுக்கு ஒரு discussion has been initiated. Okay, this is the circular. When 115 JB was introduced, this is the circular where the CBDT says it may be emphasized. Take your time because it can be a questionable area. It may be emphasized that the new provisions of section 115 JB is a self-contained code. Subsection 1 lays down the manner in which income tax payable is to be computed. We all know. Subsection 2 provides for book profit. Subsection 5 specifies, save as otherwise provided, all other provisions of the Act shall apply to every assessee being a company mentioned in that section. In other words, except for substitution of tax payable under the provision and the manner of computation of book profit, all the provisions of tax, including the provisions relating to charge, definitions, recoveries, payment, assessment would apply. What is the intention of the circular? The circular says the all other provision na enna? It belongs to charge, definition, recovery, payment, assessment, etc. In the provisions will be applicable. The CBDT circular clarifies that except for tax payable, other 115 JB 18.5 or 15% now. Under the provisions and manner of computation of book profit, all other provisions relating to charge, definition, recovery, payment, assessment, etc. would apply. Therefore, book profit for levy of MAT has to be computed in the manner laid down under 115 JB. That is by making the adjustment as specified in the explanation contained therein to the net profit as per the statement of P&L. This implies that exemptions and deductions, okay, this implies exemptions and deductions available under the regular provisions of the Act would not be available unless expressly provided for in section 115 JB. For example, income exempt under 10, 11 and 12 of the Income Tax Act normal computation have to be deducted while computing book profits if credited to the profit and loss account because it is expressly stated in clause 2. All incomes of under section 10 minus பண்ணிட்டு அதோட expenses add பண்ணுவோம். Therefore, it appears that the intent of subsection 5, which says that all other provisions will apply, is to make applicable other provisions like payment of advance tax, interest under 234B and C, return filing, penal and prosecution provisions under the Income Tax Act to a case where tax is computed under 115 JB. The Madras High Court has, however, in this case, interpreted subsection 5B to also permit adjustment for exemption under 54 EC while computing 54 MAT, even though the same is not expressly provided in the explanation. So, the interpretation of Madras High Court is slightly questionable. There are precedents where 54 EC cannot be claimed. In the classroom, we did 2 questions. Okay, where 54 EC we will do it while computing the normal provision, but while computing 115 JB, the book level profit. Difference ஒரு பெரிய difference which I don't know oversight la miss பண்ணிட்டாங்களா. Credit in profit and loss account is not capital gain. That is computed between the difference between value prevailing in the book and sale value. That is profit on sale of asset. When it comes to capital gain, the methodology of computation itself is different. So, under profit, how can I give 54 EC? Is it technically correct or not? Questionable. Okay. So, not the time to discuss and debate and to put my opinions. But okay. So, this case law, if this comes, okay, possibility being there, judicial pronouncement, please write it detailed in your own language. I don't want you to interpret mug up பண்ணோம்னா இந்த மாத்திரம் பண்ணிட்டா போதும். Charge, definition, recoveries. What the CBDT intent is for advance tax, is for 234 BC, is for assessment procedures. What the CBDT does not intend is providing exemptions or deduction other than those mentioned in that format. But the Madras High Court tappunla edhiradinga namala surya aidum. Okay, so but the Madras High Court has taken an alternative opinion. Okay, so that is all interpretation manadu. Okay, so please remember this. This is the case law I want to highlight. Okay, first for the last highlight பண்ணலாம் நினைச்சேன், but தந்தோன்னு வந்துட்டு, so I thought I can speak about this. Now going to other case laws which are applicable for companies. PGBP over. I'm starting from the top. PGBP over, capital gains over. Okay, ATI, this is where I want to focus upon. Okay, idla enna question varapodunu ungalku solreen. Okay, ATI, though it is we'll take assessment of companies as an opportunity to learn ATI also. Case law alone. Okay, ATI are all sunset provisions. Okay, we all know that, but we'll understand the case law alone. CCI, Container Corporation of India. The company's main activity is handling or transportation of container cargo. Concor, that is the company, claimed deduction for section 80IA, that is inland container depot are allowed. ICD is a allowable that is infrastructure. It is, you all know hot burglar. Okay, it is an infrastructure industry. Can handling and transportation charges also claim? Yes. Held by Supreme Court, ICD functions for the benefit of exporters and importers. These depots act as facilitator, reduces the inconvenience in import and export. Hence, the deduction under 80IA can be claimed by CCIL. In the section of importance poyachi, but now only you all know that the case law will take time to come. Okay, that is why. Okay, இதுவும் ஒரு nice case law. Conversion of entity. என்னாச்சு? Okay. Oh, this is not conversion. Sorry. Assessee entered into an agreement with Gujarat State Transport Corporation, okay, for an infrastructure development project and claimed under 80IA. However, AO contending that for claiming deduction, agreement should have been entered with the government or local authority or statutory body. Entering with the corporation does not entitle. No, entering with the corporation is like entering with the government. The corporation is fully owned by the government. Chennai corporation oda enter panninda, state transport corporation oda enter panninda, it's not allowed. It is allowed, it's also government. Held by the High Court that GSRTC is wholly owned and controlled by government, qualifies to be a government agency since it has fulfilled all the conditions. Deduction under 80A has to be provided. Okay, we have seen this Varnagiri insulative, okay, in our very often repeated case. Can unabsorbed depreciation of an industrial undertaking eligible for deduction under 80IA to be set off against any other business income? Yes. Okay, yes, it can be allowed as a set off. It's an old case law. Again, 80IA is slowly going off, not of very importance. இது ஏற்கனவே ஒரு வாட்டி டெஸ்ட் பண்ணிட்டாங்க, ஒரே ஒரு வாட்டி immediately after the judgment they tested. Okay, increase in income as a result of disallowance due to TDS default. Will it also be eligible under 80IA? Okay, this is interesting, no? 43 disallowance, TDS disallowance 30%, 100%. 80IA அது claim பண்ண முடியுமா? 80IA is after gross total income done. 80IA is after gross total income. So you would have disallowed and computed the GTI. So you can claim, held by the High Court, that such increase of disallowance is revenue neutral. நீ disallow பண்ணலேனாலும் அதேதான். The law specifies that profit is allowed as deduction. The term profit is after making all adjustment of 28 to 44. Assessee is entitled to for deduction of enhanced quantum. Meghalaya Steel gave the transport subsidy, power subsidy, interest subsidy, everything part of manufacture only, so you can claim. Okay, from the year of trial production, okay, you can start claiming if the trial production result in commercial viability. Okay, Naveen Sony's case, assessee failed to claim in the initial year but later started claiming. Can AO deny? No. Held by the High Court, okay, that the provision has nowhere stated that assessee, if he fails to claim in the year, the same will not be allowed for any subsequent year. Okay, hence AO cannot deny that deduction for assessee. Okay, 1 minute. இது உங்களுக்கு காமிக்கணும்னு நினைச்சேன். ஆர்டிபியில் இந்த ப்ரிஸ்கிரைப்டு எலக்ட்ரானிக், இந்த ப்ரிஸ்கிரைப்டு எலக்ட்ரானிக் மோட் அப்படின்னு எல்லா இடத்துலையும் ஆட் பண்ணியிருக்கிறதுலாம் கிரெடிட் கார்டு, டெபிட் கார்டு, நெட் பேங்கிங், IMPS, UPI, RTGS, NEFT, BEAM. All these things are prescribed modes. Okay, we saw no account payee check, account payee draft or prescribed mode, credit card, debit card, net banking, IMPS, UPI, okay, RTGS, NEFT and DMAP. Okay, right? Anyhow, I will do the RTP little detailed. Okay. இந்த கொஸ்டின் தான் இது ரிப்பீட் ஆகும் நான் நினைக்கிறேன் உங்க பேப்பர்லயும். ஓகே ரைட். ABC Limited has started availing the exemption of 80IC on setting up of a new industrial unit in Himachal Pradesh to manufacture sports equipment. The company availed 100% of the profits from 2012-13 to 16-17. For assessment year 17-18 to 21-22, the normal course of deduction would be 30% of profits. However, in the previous year 16-17, ABC Limited carried out substantial expansion of the existing unit by increasing its investment in plant and machinery by 60%. More than 50%, they call it as substantial. It is as if a new unit. Okay, 60% of book value on 1/4/2016. From 17-18, ABC Limited claimed a deduction of 100% again instead of 30% on the basis of, okay, Arham Softronic case that a fresh period of 5 years qualifying under 100% would commence from the year of substantial expansion. Is the claim of ABC valid? Discuss. In the question, either as it is or with a small deviation, with a variation of the facts, can reply, can be asked. Please remember. Okay, now what is the provision? Any substantial expansion, more than 50%, you will get the substantial expansion benefit. Any substantial expansion, it is, you can, the law says new industry or substantial expansion can avail the benefit. So, partly yes, 100% can be availed, but the court has said only for the remaining period. You can avail 100%, no doubt about it. Only for the remaining period. Already 5 years are over. Remaining 5 years, okay, or remaining 4 years. How many number of years it is remaining? It can avail that particular exemption. It can avail that particular exemption. The law says, okay, held by Supreme Court, where there is a substantial expansion and substantial expansion fulfills the condition of becoming a new undertaking, then assessee is eligible to claim 100% deduction from the year of substantial expansion for the remaining period in the bracket of 10 years. Okay, for the remaining period in the bracket of 10 years, you can start claiming it. Okay, you can stay, because this is coming in the judicial pronouncement. Please please ensure that before examination we are studying this case once. Okay, okay, this is the one I have talked, I wrongly said. Conversion of entity, இதுவும் judicial pronouncement. What is that? What is meant by conversion of entity? That is my dear friends, okay, I entered the state government, the partnership firm entered with the state government for development of infrastructure, 80IA can be claimed. The partnership firm got converted into a private limited company or a public limited company. Assessing officer said, "Onakku government ko, you don't have any agreement, I will deny. Held by the Supreme Court that the assessee company qualified for deduction under section 80IA, being an enterprise carrying on the stated business pertaining to infrastructure facility and owned by a company registered in India on the basis of agreement executed with the state government, to which the assessee company has succeeded in law after the conversion of partnership into a company." Have you, the Supreme Court asked, Supreme Court, okay, have you informed the state government that you have converted into a private limited company? Yes, I have informed. Okay, just because the agreement has been entered with the erstwhile firm, you cannot deny it to the company. If all other conditions are satisfied, the company can also claim the exemption. Okay, so provision, the amendment, the things to remember, section 79, please remember. Section 219 AA, please remember. Buyback, please remember. All these three things might, or one of these things might be asked in that 1 mark MCQ question also. In case laws, I feel the same Arham Solutions case law or Cheat Enterprises case law might be tested. Other than that, LTIA test பண்றதுக்கு ஒண்ணுமே இல்ல, because all are sunset provisions. Where is the question of testing in LTIA? I have already stated about Tata case law, okay, and also and also the present metal chromium case law, which is very important, which you need to give a detailed answer. Can be a standalone question also. Give a detailed answer. Yesterday we saw Tata T question. Company contended that DTT shall be taxable only to the extent of 40% under 115O, as the dividend is distributed out of agriculture income held by the Supreme Court. The character of income is different. Profit as a term is different from dividend. Dividend is a return on investment and not a return on land or building used for agricultural purpose. Hence, the contention of the company is invalidated. Whole of the dividend is taxable 115O. Tata T, easy ஞாபகம் வரும். Rolta India Limited 234 BC is applicable for 115 JB also. That is what I studied so far. That is what we studied so far. Okay. Dividend, please give a least importance to deemed dividend. Because dividend distribution tax going out of existence very rarely. Okay. These are all the case laws you should remember. These are all the amendments you should remember. And I'm going to the most important amendment. (115BAA), 115BAB. 115BAA, 115BAB, the two amendments which gets importance from the questionable angle. ஏன்னா the sure question நம்ம எல்லாருக்குமே தெரியும். Okay, but the problem is எல்லாருக்கும் தெரியும். Okay, so almost a definite question. Though it should be questioned in the subsequent years only. The first year la பெருசா the question பண்ணக்கூடாது, but sorry. This is applicable only for a domestic company. This is applicable only for a new company which commences operation from 1st October 2019. Okay. The extension is for the next year. 115 BAC for individuals. Unfortunately, the lawmakers are so honest enough to give the next section as 115 BAD for cooperatives. Okay. So now it is only for these two from 1st October 2019. So manufacturing companies, new companies. Why I am stressing brought forward loss no one kadayadu, brought forward unabsorbed depreciation no one kadayadu, MAT credit no one kadayadu, not applicable. Okay, not applicable. Okay, whereas here these are okay, applicable. One base rule for both these things I will give you. MAT under 115 JB is not applicable if you are going to prefer 115 BAA or 115 BAB. Special rates of taxation 22% plus 10% plus 4%. Effective rate is 25.68%. You should remember this effective rate, which is very, very important now. Which is very, very important now. Remember this effective rate. Here, effective rate is 15 plus 10 plus 4, okay, 17.16. Why I am saying 25.168 is more important is because of the next point. Income other than business income. All incomes are taxable in this special rate except income in the nature of STCG on which STT is paid, LTCG on which STT is paid. Okay. Whereas here, all income except income from manufacturing are also taxable in this rate. IFOS பொறுத்த வரைக்கும், as regards IHP or IFOS, the tax rate for both the companies will only be 25.168%. This was a subsequent addition, probably in May. I might not have. This was a subsequent addition. Keep on adding. அதனால இது 4 வாட்டி இன்ஸ்டிடியூட்ல ரிலீஸ் பண்ணிருக்காங்க இந்த இது. Okay, so 25 point. If you look at the இது no RTP, okay, they have been very vocal and very highly clear about some things. Okay, செஞ்சிருப்பாங்க ஒரு இடத்துல. Sorry for taking time. Okay, students are advised to ignore, okay, these things அப்படினே சொல்லிருப்பாங்க. Okay, students are asked to ignore the annexures which are released by us அப்படின்னு சொல்லிட்டு தான் இத ரிலீஸ் பண்ணாங்க, because this was consistently going on changing everything. Okay, the students are advised to ignore annexure 1, 2 and 3 of chapter 12 of the printed copy. So this is consistently undergoing change. So the changed one only we are reading. So income from other sources, that is a clarity post release clarity given, which is chargeable for 25.168. Here I understand, here 17.16 illa, that is also 25.168. However, for other things, the STCG etc. will be there. It should be a new business. நம்ம எல்லாருக்கும் new business na we will close our eyes and say it should not be formed by splitting up of an existing business. At least only 20% of the plant and machinery can be old, and otherwise it should be a new machinery, imported machinery, we all know. Other conditions common for both sections. Other conditions common for both sections. The following expenditure or deduction or exemptions cannot be claimed if they opt for the new tax rate. What are all they? Section 10AA. Sunset additional depreciation. That is the only difficult thing. That is the only difficult thing in this entire point to remember. Okay. Otherwise, investment allowance. You are the last exam writing it. Deposit based deduction of section 33AB and ABA. Specified deduction section 35AD. That's what I said. Now it is optional. Weighted deduction. You are the last batch. Weighted deduction for agricultural extension program, skill development program. Almost 80I to 80U, except 80 JJA. Next year 80M. Okay. So majority are available only for individuals and HUF. So don't worry. Okay. So you cannot claim special benefits. Additional depreciation is the only important thing. Otherwise, no 32AD, no 150%, no deposit based deduction, no deduction under 80I, no exemption under section 10AA. Brought forward laws, whereas it is not applicable. MAT credit, MAT ena panna poradilliye, not applicable. And here is the question which will get you, which will be a 1 mark question or something like that. Okay, inter-unit transfer. Ipo idu vandu the domestic transfer pricing la this is added. DTP la the section is also added as an amendment, post amendment they have added. Inter-unit transfer should be at fair market value. Ella section la adha. Transaction with relatives which are covered under domestic price transfer pricing regulation should also be at fair market value. Where it is not at fair market value, AO makes such adjustment, then the tax rate will not be 25.168, then the tax rate will not be 17.16, then the tax rate will be 30 plus 10 plus 4. Repeating, in the case of this is not applicable for an existing trading company etc. and all. It is only for manufacturing company. What is that? Where it is not at FMV. assessing officer shall make adjustment to increase the income. TP all TP or ALP, if it is not in line with ALP, AO will increase the income. And such increased income is going to be taxed at 30 plus 10 plus 4. So, write down in your notebook and keep 115 BAB has 3 rates. 115 BAB has 3 rates. Normal rate is 15 plus 10 plus 4. Income other than business income, 25% plus 10 plus 4. Income increased by AO due to inter-unit transfer, 30 plus 10 plus 4. In any previous year on or after 1920, sorry, this has also been amended. This is also now any previous year. Okay, this has also been amended now. Okay, it is also any previous year. Once option is exercised in both the cases, cannot be reversed for any succeeding year. Okay, cannot be revised for any succeeding year. Okay, special provision for 115 BAA. ஏன்னா இது 115 BABக்கு கிடையாது. Where in financial year 1819 an asset is put to use for less than 180 days, only half of the eligible additional depreciation could have been claimed. The balance half can be claimed in 1920. However, the assessee has opted for 115 BAA, then the balance of will be adjusted in the opening balance as if it has been fully claimed in 1819. I will explain you that by writing an example. I will explain you that with writing an example. Okay. From the next subsequent years, from the next 2 years, this will become dynamic. First year, simple question will only be asked. Okay. Already there is a very big, okay, you can see NEET, you can see IIT, JEE exams, and the other national exams which are conducted. There is an unofficial statement which is going around that the students should not be penalized, the exams should be simpler. அப்படின்றது எல்லா இடத்தையும் nailing into people's mind. Okay, nailing into. Okay, institute already a fringe group is asking for extension, so there will be lot of tensions for the examiner. They will not take time. Why I am telling this is you are going to be the benefited lot of group which is going to also have a straightforward paper. Okay, not only with regard to DT எப்படி இருந்தாலும் we can write, அது நமக்கு தெரியும். Okay, for other papers also I give you that benefit. Okay, so it's a golden opportunity, we should not miss it. Across the board, that is the talk. Okay, nowhere, none of the exams recently conducted, every examiner, every student are saying it is much simpler than the past examinations we have written. Okay, the civil services exams is going to be one other crucial aspect in October. Okay, where they are going to, how it is going to be. Okay, some of my friends say if this is the trend, then this is the year of civil services. Okay, like that there are a lot of things that is going on. Okay, so kandipa romba simple or question first year of amendment, not a bigger next year or third year, then there are a lot of things to speak. So be sure it is going to be a literally simpler question and we are going to crack it. But sure question. Okay. All these things, thank God, correct 1 hour. We go to assessment of companies. Okay, assessment of companies. Okay, so net profit as per P&L, we know how to remember. First add all the appropriations, reduce all the appropriation. First four items are appropriations. Okay. Next three items are provisions, including profit of sick industrial undertaking. Next five items are exempt income. Okay. Exempt income under section 10. Remember, 10AA is not 10. 10AA is different. Share of profit of AOP, royalty taxable under 115 BBF, interest of foreign company which is taxable at a lesser rate, and notional gain arising from transfer of units of REIT. This morning I explained the opposite is going to be reduced. Depreciation, the revaluation portion should be ignored. So I add back, and it is still book depreciation only, not IT depreciation. Okay. Brought forward loss or unabsorbed depreciation, whichever is less. However, in the case of companies or its subsidiaries in whose application for insolvency is pending with the tribunal, or in case of a company, its subsidiary or subsidiary of subsidiary where directors are removed under section 242 of company law by central government, brought forward loss and unabsorbed depreciation will be reduced. I will get mine 115 JB, then 2B, 2A, 2B, 2C adjustment. 2A is here, add is income, okay, reduce is, okay, expense, sorry, add is credit, reduce is debit. Amount credited to other comprehensive income, that which will not be reclassified to P&L. Three things, revaluation is never a concept under income tax law. So I will not take tangible asset Ind AS 16, intangible asset Ind AS 38, fair valuation of financial instrument Ind AS 109. Okay. Effect of revaluation of fair valuation at the time of merger, 219 AA amendment. 1/5 of transition reserve if it is credited, if it is debit reduced, transition reserve not to include securities premium, revaluation reserve, capital reserve and forex reserve. Okay. And now till you are going to say, I'm going to start a question. Start a question with, because I told you tonight we are saying PGBP, we respect you, we know what you are, and we say that we are thorough with it. Okay. Rajit Limited is in hospitality business running resorts and hospitals. The following, the one who came is John. The following informations are provided to you. Compute the income of the company along with the tax liability and other provisions. Net profit of the company after all adjustments. Provision for taxation was created 33.063 of net profit and charged to P&L. Net profits include net profit of a new hospital which is eligible under 35 AD. Dividend interim and final. Depreciation including 3.75 on revaluation of fixed asset. Deferred tax liability, loss on subsidiary companies provided, provision for gratuity, expenses incurred on the higher study of director's son, XJ Forgings. Company has undertaken a village as a part of CSR. The village school and other facilities are provided by the company. CSR circular says not allowed. Technical fees paid to subsidiary company for product design and development. Unfortunately, the company failed to deduct tax at source in Feb. when the payment of made, knowing the error, it deducted only in April, 30% disallowed. Further understood that the FMB of such services is only because it is a subsidiary company. Two provisions are applicable. Legal expenses for defending suit under ITAT allowed. Guarantee commission paid to a director for extending personal guarantee allowed. Okay, interest on overdraft taken on payment of interim dividend allowed. Only taxes not allowed. Diminution in the value of investment not allowed. Provision for bonus. 80% of the provision were paid in September. Balance, the employees were not traceable as they have left the employment. Company reversed only in the previous year 2021. Sales promotion include cost of neon signboards put all over the country, 1.90 lakhs. Out of this, you also understand that 0.02, 20,000 was paid in cash on a single day. Okay. VRS compensation paid to 11 employees who opted out in this year in an approved scheme. The feasibility study conducted for expanding into new areas of treatment resulted in failure and hence charged off. Cost of transformer, company has incurred the cost, but the transformer is given to the state government. Regularization fees paid, donation to PMNRF, dividend received from foreign company investment, interest on bank deposit, profit on sale of land. Additional information, actual gratuity for the year 35 lakhs, which was adjusted against the opening provision, analysis of plant and machinery and equipment. Opening WDV, asset purchased during the year and put to use on 16th August, purchased and put to use on 11th December, purchased and put to use on 14th January, exclusively for a research program which is approved by the Ministry of Science and Technology. Purchased and on 31st March, yet to be used for research program. Depreciation of all other as per ITI. Brought forward loss and unabsorbed depreciation, both, okay. Brought forward loss as per books, as per ITI Act. Okay, loss from specified business. Assume the computation of profit of specified business as declared in the P&L account is same for income tax purposes also. Details of land sold. Sale consideration during the previous year, 5.15 crores. Land was purchased in May 2015 for 2.7 crores for hospital project. It was shelved due to feasibility study proving negative. Investment in the bonds of 54 EC before the specified time amounted to 60 lakhs. We are supposed to work out the tax liability. It's in crores. With all your permissions, in order to save time, I'm working on a different page. This will also give you a reasonable idea of what changes. Provision for taxation, it has said that provision for taxation is created at the rate of 33.063 of net profit and charged to P&L. So it is after charging I get 133.874. after charging I get 133 200 வரும்னு நினைக்கிறேன் அந்த மாதிரி தான் முன்னாடி வர்க் பண்ணேன் okay so if 100 is the profit okay I would have created a provision of 33.063 and then it would have resulted in it would have resulted in 66.937. So if this is 66.937, what is 33.063? Okay, what is 33.063? You will somewhere get it as 200. That's what I was working once upon a time. Okay. Okay. Right. So it is 200 crores. Now I go to item wise. Okay. Net profit under 135 AD. Okay. For safety purposes. Okay. Now profit under 35 AD to be treated separately. Okay, only in the normal provision 6.15. Only in the normal provision it needs to be treated separately 6.15. So it should be reduced from the net profit because 35 AD as a brought forward loss, we will check with it. But that adjustment is not there in our 115 JB, we all know. Okay, depreciation, the whole of the book depreciation under normal provision, okay, depreciation on the revaluation part of asset. Okay, in the normal provision I will disallow the entire 16.35, entire 16 point, I missed it, 16.35. Here I will only disallow 3.75, or there is another way, add back 16.35, reduce some 12 point and all, that is also fine, that is also fine, or add back 3.75. Target is understanding. Okay, dividend in both the cases, okay, interim and final, in both the cases it is not going to be allowed, in both the cases it is not going to be allowed. 18.1, 18.1. Okay, in both the cases it is not going to be allowed. Okay, so dividend is over, depreciation, deferred tax, in both the cases எக்ஸாம்ல ரொம்ப தெளிவா டெபிட்டட் கிரெடிட்டட்லாம் இருக்கும். நான் டைப் படிக்கும்போது மை லேசினஸ் ஆஃப் கான்சென்ட்ரேட்டிங் மோர் ஆன் த கொஸ்டின் அண்ட் நாட் கான்சென்ட்ரேட்டிங் ஆன் லுக்கிங் அட் த வேர்ட்ஸ் இட் ஹஸ் பீன் டெபிட்டட் அப்படின்றது. ஸோ ப்ளீஸ் டோன்ட் மைண்ட். ஓகே, 1.80, 1.80. Okay, deferred taxes, loss of subsidiary company, in both the cases not allowed. Loss of in both the cases not allowed. 11.2, 11.2. Okay, loss of provision for gratuity, provision for gratuity 6.65. okay, should I add it back here also? There is a small high court judgment which says provision for gratuity is not a contingent liability. There is a high court judgment which says provision for gratuity is not a contingent liability, so it should be allowed. Okay, that is a high court judgment only. Kindly add it and write a note. that okay, normally provision for gratuity, in my understanding, in our popular understanding, it is a contingent liability only. Okay, just because it is done on actuarial valuation basis, it cannot get a scientifically valid. ICDS 10 allowed அது இல்லையே. It is not scientific or the 40A9 it clearly says it is disallowed. But here there is a very rare judgment. It is not a contingent liability, but you write that judgment. I'll also write as XJ forging judgment. But as of now, disallow. That is better. That is better. Expenses incurred. This is okay. Here onwards, I am only writing the case quotation XJ forgings. Okay, XJ forgings 0.90. We all know here it will not be disallowed. Here it will not be disallowed because it is 115 JB format. It is 115 JB format. CSR expenditure. CSR expenditure of the company 3.82 disallowed as per the circular. Here it will not be disallowed. 115 JB format, so it will not be disallowed. Okay. Payment to relatives in excess of fair market value. Payment to relatives. First, adil than disallowed 40A2. Then we will, because on the allowable quantum only 30% should be disallowed, not on the total payment. On the allowable quantum, you can disallow 30% for non-deduction of tax at source. But you should not disallow on the total payment and then again disallow another amount. So 8.1 minus 5.2. No disallowance there. 30% of payment to joint venture company for non-deduction. However, allowed in 2021 as the default is rectified. Okay, so for 5.2 into 30%. Okay, not there because it is not there in the format. Legal expenses for defending the suit is a genuine expenditure. Legal expenses are allowed. Okay, are allowed in the normal course of business. Only tax paid is disallowed, so it will not be disallowed. Guarantee commission paid to a director. As the company received a benefit. Okay, so it is assumed tax has been deducted at source. இன்னொரு value added answer வேணும்னா இன்னும் எழுதலாம் under 194J because it is not a remuneration to be deducted under 192. If the examiner has time and reads this, they'll come to your house and appreciate. Okay, so interest on overdraft taken. Interest on overdraft taken for payment of dividend allowed. It's allowed, my dear friends. Okay, diminution in the value of investment is a contingent liability. Specifically said it is disallowed in 115 JB. Provision for bonus 1.6, 80% paid before due date. Okay, according to section 43B, statutory payment which includes bonus, okay, not paid within due date needs to be disallowed. ஆனா அந்த மாதிரி எதுவும் 115 JB formatல கிடையாது. Okay, so 1.6 into 20%. Okay. Sales promotion expenses include neon signboard. So first I'll write Oriental Ceramics neon signboard allowed. Then I will write 48.3 disallowance. 48.3 violation. Okay, out of this 0.02, so 2 lakhs. Okay, and VRS compensation. VRS compensation allowed in 5 equal installments. VRS compensation is allowed in 5 equal installments. So, 10 lakh per employee in 1.1 they have paid. Only 5, okay, divided by 5 into 4 will be disallowed. 4/5 will be disallowed, my dear friends, because it should be allowed in 5 equal installment. 4/5 will be disallowed. There is no such thing in 115 JB format. Okay. Okay, allowed. I'm not writing the detail. Okay, without creating of an asset, etc. Okay, Infosys Limited, Hindustan Zinc. Okay, so these are allowed. Okay, number Millennia Developers. Okay, this point, I mean 50 lakhs is disallowed. 50 lakhs is disallowed. Donation to PMNRF is disallowed under the normal provision. Okay, one is disallowed. 1 crore is disallowed, which has been given. Dividend received from foreign company investment. Dividend from foreign companies taxable under IFOS. Okay, taxable under IFOS 0.80. 0.80. Interest on bank deposit taxable under IFOS. Okay, taxable under IFOS 0.30. Okay, profit on sale of land taxable under capital gains, 2.45. 2.45. Okay, actual gratuity paid, unfortunately there I cannot reduce. Okay, 35.35. 0.35. Okay, okay. Asset purchased for approved research program. Okay, even though not put to use, asset purchased for approved research program 8 plus 3 11. 8 plus 3 11. 8 plus 3 11. Okay, depreciation as per IT law. Sorry, this is also minus. Depreciation as per IT law, asset purchased during the year 16th August, 11th January. Two assets are purchased. So 40 plus 14, 54 crores into 15% plus 11 crores into 7.5% plus 4.10 crores. Repeating, 40 plus 14, 54 crores into 15% plus 11 crores into 7.5% plus last of 4.1 for other assets. I'm repeating the answer. Depreciation as per IT law. Okay, please understand. 54 into 15% plus 11 into 7.5% plus 4.10. This is again totally as a minus amount only it should come. So the learning tells us that whatever I am adding here, I will definitely do it here also. Okay. And apart from that, there are a lot of disallowances in my normal. That is always the point of 115 JB. That is always the point of 115 JB. Okay. Now brought forward loss, I'll work it out, land. Okay. So what happens now is business income slash, okay, book profit under 115 JB. நீங்களும் போட்டு சொல்லுங்க ஏதாவது digits or signல ஏதாவது நான் mistake பண்ணிருக்கலாம். Please take your time and do it and also let me know.
$233.025.
Friend,
33.025. Sir.
this is wrong, friend.
Every time add profit before taxation.
Oh, okay. Yeah, possibly. Yeah. I should have added with 200. Is it correct, friend?
Yes, sir.
Okay, so this I will come back to this. Leave some 4 lines, 5 lines on the safe side. Leave 4, 5 lines. Okay, I will work total income. Okay, I am going to compute total income normal provision. Computation of total income. I will come back to book profit. Don't worry. I will make you understand something else also. Computation of total income. Okay, leave 4, 5 lines. I want that. Okay. Because for this losses I will write okay. Now one non-specified business as computed. Okay, I have we have computed 233.025 less brought forward loss as per IT law. Less brought forward loss as per IT law. As per IT Act, the brought forward loss is 1.58. 1.58. Okay. I'm yet to do that. I know, I'm aware of, that's why I ask you to leave 4, 5 lines. Remember, brought forward unabsorbed depreciation. Brought forward unabsorbed depreciation 4.45. So my normal business income comes to, okay, 226.995. Specified business. Okay, income as provided in P&L account. Okay, income as provided in P&L account is 6.15 is 6.15 less brought forward loss less brought forward loss 7.65 loss to be carried forward to be adjusted only against the income from specified business. Okay, just to for your understanding, indefinite period. Okay, it can be carried forward for an indefinite period. So the remaining loss 1.5 lakhs, 1.5 crores, you can carry forward, but you cannot set it off. You cannot set it off. Computation of capital gains. Computation of capital gains. Okay, say on sale of land, full value of consideration, full value of consideration, okay, 5.15. Okay, land was purchased in May 17 for 2015 for okay, less ICOA, okay, 2.70 into 289 divided by 1516, please. 1516.
Sir, it's a 254, sir.
254. Okay, 2.70 into 289 by 254. Okay, 2.70 into 289 divided by 254. Okay, gives me 3. Okay, gross LTCG is 2.150. Gross LTCG 2.150. Investment in 54 EC bonds assumed to have been made within 6 months, restricted to, okay, 50 lakhs. Only you can claim 50 lakhs. So it is 1.650. Okay, other sources. Dividend from foreign company. Dividend from foreign company. My dear friends, I received a dividend from foreign company 0.80. Okay, 0.80. Okay, interest income. Okay, it is for surplus money deposited. If they have given margin money, my answer would have been different. 0.30. Okay, there is no other sources income. There is no other sources income. So I take it as, okay, gross total income. Gross total income gross total income 222, okay, 229 crores. Okay, 80 deduction for PMNRF 1. Okay, just to ensure that I don't miss out on anything, I'm just running through once. Because I'm confident this is going to be the tax, because there it is 15% and it's going to be lesser. Okay, total income.
Sir?
Yeah.
Sir, and you have written that investment before EC bonds assumed to have been made within 6 months, sir. But on a question day, they have given that it is made before the specified time. So assumption.
தேவையில்லை தான்டா ராஜா, நான் பாதியில கொஸ்டினை நிறுத்திட்டேன் படிக்கிறத. Yeah, தேவையில்லை. The assumption is not necessary when they are given.
Okay.
அதிக percent தான வேற ஒண்ணும் இல்ல. Okay. So
Sir,
this
that
is
index cost of acquisition, can you show me the calculation once? I'm getting a
indexed
different
cost
amount.
of acquisition.
Yes, sir. The three.
0.79 into 2.
70, sir, not 79.
So 228.745. Computation of tax assuming 30%. Okay, because profit itself is so much means turnover will be higher only. So assuming 30%, tax at the rate of 30%. Okay, and surcharge. What is the surcharge? The income is more than, okay, 1 crore to 10 crore 7%, more than 7% 12%, more than 10 crores 12%.
Sir, that still I'm getting a different answer for the index cost of
Yeah, I
acquisition. I'm
understand.
getting
I put 0 ன்னு
3.072.
நினைக்கிறேன். அதனால தான் உங்களுக்கு ஆன்சர் வேற விதமா வரும்னு நினைக்கிறேன். ஏன்னா நான் வந்து இங்க வந்து can I give you 3 digits? Are you
ரவுண்ட்
getting it?
பண்ணிட்டீங்க சார் அதனால.
Oh, no, no. Then I'm wrong. Sorry.
28.675.
இது இப்போ கரெக்டா வருதா உங்களுக்கு?
Yes, sir.
Yeah. Okay. Sorry. Tax computation. I need to. Okay. Income taxable at normal rate. That is, I'm taking at 30% will be this amount minus my capital gains. Okay. This is at the rate of 30%. Okay. Income taxable at special rate. LTCG at 20%. LTCG comes to 1.578. Okay.
So
Into
dividend from foreign company
the
15%.
specified foreign company சொல்லல. அதனால I have not taken that 15% rate.
Okay. Hmm.
That I hope that is the question, right?
Yeah, yeah.
Unless the word specified foreign company is there, we will take it. We will not take the special rate. Kindly verify and tell me. I hope it is right. Provision la புரிஞ்சுங்க. The tax rates small mistake. Now I'm coming here. Okay. Brought forward loss or unabsorbed depreciation, whichever is less. Okay. Brought forward loss or unabsorbed depreciation, whichever is less. 1.45. 1.45. Now I am writing this. You can write this or put it as a note, etc. According to metal chrome. Metal and chromium platters. Okay. Metal and chromium platters. Okay. The Madras High Court held that 54 EC exemption can be provided while computing 115 JB. So the Madras High Court decision says I can claim 50 lakh. Okay. Then book profit. Profit under 115 JB. Okay, both are minus. And then you will write the detailed note on how the
0.5 தானே சார் வரும்.
sir?
அது 0.5 தானே சார் வரும். இல்ல க்ளோஸ்.
Okay, and then you will write a very detailed note on what the CBDT circular says, how it has been interpreted. Okay, let's wait for the Supreme Court. Then book profit under 115 JB 241. Okay, in the book profit, in the profit level itself, we have a higher profit, and the tax rate is also 30%. So, 18.5%, 15% putting now very small. Okay, don't worry. This is the tax, but this is the book profit understanding.
Sir, exemption should be reduced, no, sir?
Sir,
Yes, friend.
sir, in exam, can you expect such a lengthy sum, sir?
Never, friend. Never. I am supposed to tell you after this. See, now உங்களுக்கு consolidate பண்ணணும்ன்றதுக்காக 50% of this கூட, if the question is lengthy, no 115 JB. Lengthy ன்றது 10 adjustment இருந்தாலே ignore math. Math is always a separate question. How many questions in exam has come both normal and the math means very few. In that case, adjustments will be restricted to 5 or 6 only. In examination, it will not be a lengthy question. Please don't get worried. I was just trying to put a consolidated PGBP question to put it in shelf. At the same time, work out math. That's all. So please don't get worried.
Okay, sir. Thank you, sir.
Sir, in exam this 54 EC, we should reduce it and give a note, or we should not consider and give a note?
Anyway is fine. Anyway is fine. Anyway, it is fine. I think if they are going to ask this question, they will not ask you to compute the normal tax. Okay, they will only ask you to compute the book profit. Compute book profit with this. That's what they will do, because you will always have a doubt. Reducing 50 lakhs, I get a different. The tax under normal rate is higher. Not reducing 50 lakhs, tax under 115 JB. Avlo intricate questions kadayadu. It will be a straightforward question. You please write a note. I personally feel it will be not a main question, it will be a standalone question. But that is different. This is it. Or sometimes they are going to totally ignore because they also feel that it is not right. Okay, a question where you are going to give me the answer, I will tell you how to work out. You are going to give me the answer, okay, I will tell you how to
Tax
work.
கண்டுபிடிக்க வேண்டாமா சார்?
Sir,
Math tax liability.
mat liability,
Yes sir.
are you asking me whether I should compute mat liability?
On this question we have to do no then to compare math.
You can check, no, 15% போட்டு பாருங்களேன். First 15% level you will understand 240.650 into 15% will be already 36, but here the base tax itself comes to 68.444. There itself you can stop. Okay, you in examination you should do. Here I am not doing because I know it is not coming. Why to waste time? That's why. In exam, please do and show that this is high. Okay, right. Let me do this question in the classroom. Okay, before doing this question, let me tell you one of the I have drafted this question for one particular purpose. Okay, number formatted. Please take the format. In that you will find on in the revision material, in the format you will find, okay, income of a foreign company which is taxable at a rate of lesser than 15%. There are 3 or 4 incomes like this. Interest on infrastructure development. This morning we saw this REIT. When they are paying to a non-resident, it is in the rate of taxation is 5%. Okay, sometimes rupee denominated bonds, the rate of taxation is 5%. So that royalty, fees for technical services 10%, LTCG is at 10% because they will not get the indexation benefit. Remember, again repeating, this question which we are going to do is on this particular point. I drafted this question when this amendment came, but the question did not come. I thought this year they are going to, so you can be also very clear that there can be all possibilities I am wrong. Okay, so income of a foreign company which is taxable at a rate lesser than 15%. Infrastructure investment is taxable at 5%. Investment, okay, royalty and fees for technical services 10%, LTCG 10%. So you cannot go out to him and say 10% or 15%, whichever is higher. So I am taking it out in the 115 JB format also, and the expenses incurred on that I am not going to allow, so I am going to add back. Keeping this provision in mind, okay, I am going to approach this particular question. Walt Disney picture, a foreign company having a permanent establishment provides you and provides details of such PE which compute the taxable income. Okay, net profit as per P&L account after debiting or crediting the following: royalty income, okay, from government of India as per agreement, interest income on money lent in foreign currency, that is not 20%, that is not 15%. That is not 15%. Okay, STCG on STT paid, expenses on earning royalty, share of loss of AOB in which company is a member, transfer to currency fluctuation reserve, loss as per books brought forward, depreciation, business loss, loss as per IT law. Okay. Whether to do it now or last day of being question, I'll do it now, but more understanding will be clear on the last date. normal computation.
Sir,
Listening.
exam can we present it this way, but
No,
or
no, no,
they
no.
expect us no,
No,
right?
no,
They'll
no,
expect us
no.
to do
Not
it
in exam
separately.
like this. Exam column 1 will be step 1, column 2 will be step 2.
Okay.
No, it's not less than 50. So it's HTTG only. So it's exactly 15%, no problem. Previously, when I did this question, it was 18.5. So I reduced it. Okay. 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 Income as per normal provisions. Though larger understanding will be day after tomorrow evening, day after no, subsequent day. Okay, today's okay. So larger understanding, I will ensure that foreign company its taxations are absolutely clear to you. Okay, but now I am just working out more. My importance is more for book profit. That's why I have kept it highlighted. My importance is lesser for normal provisions. Normal provisions la pinnadi idu patti ena you will have a doubt why I have not reduced depreciation. It depends upon where the depend because brought forward depreciation 28 to 44 expenses will not be allowed against special income. All expenses under section 28 to 44 are deemed to have been claimed. Okay, so this depreciation which has been brought forward cannot be claimed, but will take time. Please wait. I will make you understand this non-resident taxation. Now my interest is to understand the book profit part of it. Okay. %% of book profit. Okay. 15% of book profit. Okay.
Sir, brought forward symbol is changed. Minus in it.
15% of book profit, 4.65. Please understand, 10% of royalty income, 10% of royalty income. I have reduced the royalty income of 75 lakhs because it is taxable at 10%. Because it is taxable at 10%, 0.75 into 10%. This is taxable at 10%. I have reduced it because it is taxable at 10%. Okay. And the expenses will not be allowed as deduction. So entire 75 will be taxable at 10%. Total base tax, okay, total base tax will be, okay, 0.540. Income has exceeded 1 crore, not 10 crore. 2% is the surcharge. Income has exceeded 1 crore, foreign company. Income has exceeded 1 crore, okay, and surcharge at the rate of 2%, okay. HEC at the rate of 4%, HEC at the rate of 4%, okay. Don't disturb. Okay, 4%. So total tax, okay. I have not worked out normal. I will give you an idea. Normal தான் ஜாஸ்தியா இருப்பது. Why? This is 40%. This is taxable at 40%. Okay. But in my normal computation, I will also reduce interest, which is taxable at 20%, royalty, which is taxable at 10%. Please understand. I will, okay. In my normal computation, I will work out and show you in foreign company the same question. Okay. 0.75 into 10%, 0.35 into 20%, 0.50 into 15%, the balance into 40% will be my taxation. The balance into 40% will be my taxation. That will be higher. I will work out and show you. Because I want you to be clear with the rates. Then I will work out and show you. And that will be higher. The same question while working non-resident taxation, I will work out the foreign company rates. I will give you a small deviation there and show you also. We will take the break. 15 minutes is, I thought we should complete 115. Okay. We'll take the break. 15 minutes is the break. 8:15, we are back. Let's continue, friends. I hope you're back. Okay. Let's continue. Okay. Third question is your homework. Third question is your homework. Thanks for the 15 minutes break. I worked out the third question. Okay. I have worked out the third question. Okay. And you can check the answers after completion. After completion, you can check out the answer. But that question is a homework. We'll give you a pop-up idea on India's adjustments, that 5 items and its adjustment. 115 JB will be a straightforward question. 115 JB is a straightforward question. If it is there in the exam, never miss it. Okay. I know there are many in this who are listeners here on who are top ranking students, but I am talking to a student who is normal, okay, who is like me, okay, who is a very average student, who thinks pass is big, okay. என்ன maximum ஒரு தப்பு பண்ணுவோம், ரெண்டு தப்பு பண்ணுவோம், அதனால அந்த question maximum சொல்றேன், we will not do. I'm very confident. I'm 100% confident. Okay, trust me. I'm not at all. From 2 days back, I'm not at all sleeping. I'm only thinking about you people. Not that ஏதோ பயங்கர sacrifice-லாம் இல்லை, யாரோ நம்பிட்டீங்க. Okay, she just came for me all the way from her place. அது என்ன ஒன்று வேற மறந்து போயிட்டு ஹரிதாவா திட்டுவா. ஓகே ஓகே ரைட். ஸோ அந்த மாதிரி பீப்புள்லாம் இருக்கிற கான்ஃபிடென்ஸ்ல அந்த கான்ஃபிடென்ஸை ஷேட்டர் பண்ணக்கூடாதுன்றதுக்காக தான் ஐ எம் ஒர்க்கிங் டே அண்ட் நைட். But when I look into all the question papers, I have some 14-15 question papers, but unfortunately those question papers are not valid now. Everywhere 115 JB is never even, they give you a list of items in the same list in which you have to add and reduce. Okay, such questions have also been appearing. So please don't worry. 115 JB will not, should not, must not challenge you. If there is a question on 115 JB, go ahead and approach that question. Go ahead and approach that question. You will hit it correctly. You will hit it correctly. Okay. Now we are going to go to some more PGBP to just get that last grip of PGBP, to say to yourself 10 times that don't worry about PGBP, I have done it. Okay. I hope, I pray and hope this morning you had the confidence on capital gains. You can answer a question on business trust with a, okay, by listening to it once or reading it through it once. You can answer a question on business trust. Firm is not something away from PGBP. Companies are not going to be away from PGBP. So by making you thorough in that, I am ensuring that you are absolutely clear. So quickly, we are going to be literally on the fast track. Okay, now to look into some of the aspects of PGBP. Okay, I'm in question number 4, page number 32. I'm in question number 4. Chenab Limited engaged in the business of manufacturing. Okay, it's a company engaged in manufacturing. Four things pop up to me. Okay, shows a net profit of 2 crores for the year ended after debiting or crediting the following items in the statement of profit and loss account. Depreciation provided on straight line basis. 6 lakhs salary to research assistant. So நம்ம அந்த எங்கயாவது ஒரு இடத்துல அந்த manufacturing companyக்கு you should link. Okay, they will manufacturing, the reason given is they want to link you. Okay, and 4 lakhs for purchase of material for in-house research and development facility approved by the prescribed authority. Okay, so you have to add back 10 lakh, reduce 15 lakhs. Legal expenses in connection with issue of bonus shares and right shares. Bonus shares is allowed, right shares not allowed. Opening and closing stock were undervalued by 10%. Secret commission not allowed. Payment of 15 lakhs in ellame exam questions. Okay, if at all there is an additional adjustment I would have made, but everything is exam question. Exam questions revolve around only few adjustments. Sir, I know so many things in PGBP, but when I read the exam question, only few adjustments. That is the truth. That is the truth. Sir, I read about forex differences. If the forex difference is for asset, you should add it or reduce it from the cost of the asset. If the forex difference is for any other item, you can claim it. There was an ICDS for it. There was a provision of 43A and 43AA for it. Where is it in examination question? Okay, this is the honest truth. Examination question, and that is the truth also. You know, 95% of the Indian population will fall only in these type of adjustment. If you go for a rare adjustment in the year of non-amendment, amendment இருக்கா அது rare இருந்தாலும் கேட்டுருவாங்க. In a non-amendment year, they will not question a rare adjustment. Not that I don't want you to go through. You please go through. I don't mind. If you have time, quickly browse through the papers of PGB. But questions படிக்கும்போது you will get more confidence that same adjustments are repeatedly coming, just to give that additional. And I am not my adjustment might be extra, but I have not pruned the adjustment of examination. I want to present it as it is. Secret commission, okay, and voluntary retirement, we know what to do. The company adopts a policy of providing 5% debtors in the beginning of the year as provision for bad and doubtful debts, not allowed. No tax has been deducted on some 12 lakh paid to a contractor who is a resident firm for some of the works outsourced. So this will be my extra adjustment, just to give you that extra benefit. However, the contractor has considered the same in the return of income by him on 30th June. So you should write this is disallowed in the current year and allowed in the next year. Assessee will not be considered as default. And my friend Neti, she was correct in telling us that you will pay the interest. Assessee is not a defaulter, but assessee will pay interest alone. It need not pay tax. Cash donation to a political party not allowed. Okay, political party not 2000 limit. Additional information: normal depreciation allowable is 25 lakhs, which include depreciation on new plant and machinery 30 lakhs acquired and installed in Jan 2020. They want you to do the additional depreciation because it is a manufacturing company. Addition to fixed asset given above includes 25 lakhs on account of machinery acquired to its in-house research and development facility approved by the prescribed authority. We will take it there. Bad debts written off during the year by adjusting the provision for bad debts 15 lakhs. Compute the income tax payable, indicating reasons of treatment of each item and MAT. Okay, so ignore MAT. The ivlo adjustment vandale, the examination question will ask you to ignore MAT. You can take the past 5 examination question. Everything is ignored MAT. Adjustment will be like this only. Okay, sir, one rare adjustment you don't know. Don't worry. You go ahead with that question. There is all possibility. I wish, I pray that everything come and stands in front of you. Suppose even 1 or 2 adjustment you don't know, boss, you are hitting at 80% of the question correctly. And please go ahead and approach the question. You will get the sufficient mark. Okay, but with all modesty, with all belief, I tell you, there will all adjustment you will definitely know. Okay, let's go. Let's proceed.
Sir, that secret commission, if the question mentions that they have deducted TDS at 20%, can we allow that?
The CBDT circular says secret commission partakes the character of bribe. Originally, there was there were 2 alternate opinions. If tax is deducted, it will be allowed. But the recent circular says secret commission takes the character of bribe. So please disallow it. Better.
Okay.
The next prayer is all the 6 days my throat should cooperate. So it will be 6 plus 10, 6 plus 4, 10, plus one other mission of 25. 6 plus 4, 10 plus 25, 35 lakhs into 150%. One lakh 33 இருக்கலாம். Don't worry about it. Or the 15 lakh add பண்ணி 3 lakhs minus பண்ணுங்க. I need to recompute the normal depreciation. Normal depreciation allowable is 25 lakhs. which includes depreciation on plant and machinery costing 30 lakhs on which in the addition to fixed asset 1 above includes 25 lakh on account of machinery acquired for in-house research. On that I cannot compute normal depreciation. On that I cannot compute normal depreciation. I cannot compute additional depreciation also. I cannot compute additional depreciation also. So normal as computed is, they are saying 25 lakhs, okay, less depreciation at 7.5%, which would have been charged for asset purchased for research. Now the asset itself was provided as deduction. So depreciation cannot be allowed. Since I have allowed the asset itself as depreciation, I cannot, asset itself as deduction, I cannot allow the depreciation. So on this 25 lakhs, 7.5%. Why 7.5%? Because it is purchased in January. So my normal depreciation will only be 25 lakh minus 187,500. Additional depreciation for rupees 5 lakhs only. Why 5 lakhs? Because what I have purchased is 30 lakhs. No doubt I have purchased it for 30 lakhs. But out of that 25 lakhs, I have taken it as cost of the asset. So remaining 5 lakhs only is available. Remaining 5 lakhs only is available. On that only I can charge it. Okay. 5 lakhs at the rate of 10%. So 5 lakhs into 10%. 50,000. 5 lakh into 10%, 50,000. Of course, you can also write the balance 10%. The balance 10% can be claimed in the next year, financial year. Okay. So this is my depreciation. This is my depreciation. Okay. Bad debts. Okay, here itself I write. GGB cannot be claimed as it is donated in cash. Somebody has a question? There's a new. Please mute yourself. So 203 47 500. Okay, the question has also asked us to compute the tax. Okay, a old question, that's why they have not given the turnover. I will take it as 25%. In the new questions they will give you the turnover, etc. Okay, tax at the rate of 25%. Assume that FY 17-18 turnover is less than 400 crores. Okay. So into 25% and surcharge at the rate of 7%, and HEC at the rate of 4%. Okay. When I was working the question, it occurred to me. Okay. Just ஒரு knowledge-காக, not for your examination purpose or not for question purpose, just for knowledge purpose. Suppose 115 BAA, okay, they have opted for 115 BAA na in the question la eppadi irukum. Okay, suppose I'm not saying they will opt. Okay, this is lesser, obviously. Suppose if the company opts for 115 BAA. Okay, what happens? I will take this total income. Okay, this is, and I cannot claim this weighted deductions. I cannot claim, what are all I cannot claim? 10 AA. If I start from the first 10 AA, I cannot claim. Anyhow, I have not claimed. Okay. If I come to PGBP chapter, additional depreciation, I cannot claim. Okay. Additional depreciation, I cannot claim in this. Okay. So whatever additional depreciation I claim, I add back. Okay. 32 AD, I have not claimed. 33 AB, I have not claimed. 33 ABA, every one of us has forgotten. 35, okay, scientific research asset, I should not claim the weighted deduction of 150%. That weighted deduction is not available. Only 10 lakhs can be claimed. Okay, weighted deduction on account of SR asset, scientific research. Yes, SR marketing. Okay, okay, I cannot claim this. I cannot claim this. That is 5250. I cannot claim. Okay, so I will add back 52 lakh 50,000. Okay, reduce actual expenditure on SR. Okay, actual expenditure on SR 10 lakhs plus 25 lakhs. Okay, this I need to reduce it. Okay, this I need to reduce it. Okay, 35. Okay, 35 AD, they are not appearing in this question. Skill development I have not claimed. Okay, agricultural extension program I have not claimed. I have not claimed any income based deductions under section 80I to 80U other than 80 JJA or other than 80 JJA. So I have not claimed anything. My total income applying the provisions of 115 BAA, my total income applying the provisions of 115 BAA will come to 2 crore 21 lakh 47,500. Okay, tax at the rate of 22%. Tax at the rate of 22%. Okay, will come to this, and surcharge at the rate of 10%. There it is 10% only. Okay, will come to this. Okay, and HEC at the rate of 4%. Okay, okay, total tax Okay, is this lesser? 5574. Is this lesser? Okay, good. Okay, so if at all in the examination something like this can, okay, assessee can prefer, okay, 115 BAA, but once assessee opts for it, not later withdraw. Because next year, if you purchase more asset for additional depreciation, etc., and next year scientific research career, additional depreciation will only be the henceforth the key factor. Okay, or who knows, next year the tax rate they are moderating. Okay, just I thought when I was working scientific research, I thought I will work out. My intention while framing the while reading the question was not like this. When I was working, I thought I can work out and show you so that you have a small idea about it.
Sir, you have mentioned in the notes that ATM also cannot be claimed. What is ATM, sir?
ATM can be claimed next year. Dividend it will be in blue. Sorry, நான் அப்படி cut paste பண்ணிட்டேன். When I was teaching for this batch, there were some students of next May 21. In the next May, ATM dividend intercorporate dividend. There is going to be a deduction in chapter 6A for corporate assessees. So you can claim that I was telling. So that's why ATM is not now there for your examination. As a chartered accountant, you will read it. Okay. Question number 5. Epsilon Limited is engaged in the business of manufacturing. Its statement of profit and loss account 350 lakhs after debiting or crediting the following. Depreciation provided on straight line basis, normal depreciation allowable as per IT lakhs. Company has made cash payment for purchase of expenditure as below. 8 lakhs due to strike of bank staff allowed because 6 DD space. 5 lakhs due to cash demanded by supplier not allowed. Okay, cash payment made to transport operator for hiring lorry is all as follows: 50,000 disallowed, 35,000 allowed, 52,000 disallowed, because 35,000 is the limit for transport operator. The 8th one limit is acceptable, the other two are not acceptable. 8 lakhs contribution to National Laboratory under section 35(2)AA scientific research, add and reduce 150%. GST of 2.1 lakh pertaining to 18-19 was paid on 5/12/2019. So last year they would have disallowed it. Current year we should allow it under 43B, debited or credited. So they have debited it. So do not worry about it. Okay, purchase has also, company has also purchased goods of 63 lakhs from Gamma Limited, in which the directors have substantial interest. The market value of the goods is 58 lakhs. So 5 lakhs needs to be disallowed, 40A2. Bonus issue allowed, right issue not allowed. Donation paid to a registered property by way of a check 17 lakhs, disallow, provide 80 GGB. Compute the total income and tax liability by integrating and analyzing and applying the relevant provisions of income and decide the decided case law. Give reasons for treatment of each item. Ignore matter. Case law. Case law get there is no case law in this question. All are provisions only in this question. All are provisions only in this question. Okay, turnover 252 crores. Okay, right? Obviously homework. Not very important, or not going to take the classroom time. Okay, to take the classroom time. Okay, question number 6. Preetam Motors Limited is engaged in the manufacturing and selling of cars having an annual turnover of 5,000 lakhs. The net profit of the company for the year ended is 150 lakhs after debiting or crediting the following. One-time license fees. Yesterday our friend was asking, if you remember, factory license. Sir, you said that the factory license, can I treat it as capital expenditure? Because he was remembering this provision, he asked me that particular doubt. That's what I believe. Okay, I told him the answer. It is not a one-time license fees, because the quantum is also simple. It is a recurring license fees. So one-time license fees paid to a foreign company is a intangible asset. You should capitalize it, provide 25%. This adjustment for this year can come like this: one-time license fees paid to a joint venture, but the joint venture agreement says that anytime the agreement will lapse and the assessee does not have the right to use the asset after that. In the Honda Seals Limited, they built in clauses. They built in clauses to make it believe that it is not a license, it's not going to be a capital expenditure. It is as if it is a revenue expenditure. They built in into the agreement like that. Okay, if that all the question comes like that, provide the Honda Seal case and still capitalize it, provide 25% depreciation. Dividend 12 lakhs received from foreign company in which the company holds 32%, specified foreign company 12 lakhs, take it out. When you tax it at we will tax it at 15%. Expenses should be disallowed. Feasibility study padikave vanda, we know what case they are talking about. Payment due to railways for the use of asset transportation of cars, the company is likely to make the payment in December. It is a statutory payment to be disallowed. Contribution made for Science Research Association for the purpose of social science and statistical research, 100% only allowed. Only scientific research, 150%. Depreciation charged to the statement of profit and loss account, opening and closing stock were overvalued by 10%. Payment of 18,000 and 12,000 by cash on 15th Feb 2020 by two separate checks to a contractor who worked disallowed. Okay, on a single day. In the question over 20,000 limit, appeal disallowed because 18 plus 12 makes it 30. Okay, legal fees incurred for defending the factory title of the company allowed. I told you, if it is at the time of acquisition only, it should be capitalized. Subsequent legal expenses or day-to-day expenses, so many things going on. Allow profit of 3 lakhs from hedging contract entered into for meeting the loss in foreign currency, payment towards an imported machinery from Germany for 90 lakhs, which was installed on 2012. In the money date kudutale, we know it is a capital expenditure they are speaking about. So foreign currency, இதுதான் 43A, anything for acquisition of machinery should be taken to the cost of the machinery. So you have to reduce the profit, reduce it from the cost of the machinery, 7.5% depreciation. The company during the year employed 100 new workers in the factory, which was 15% of the existing force employed on the last day of the previous year. It paid 15 lakhs as additional wages. The workmen were employed for more than 240 days, 80 JJAA. Profit on sale of land. Provision for warranty is made on all vehicles. Amount exam because it is covered under ICDS 10. Okay, it's based on a scientific and reliable basis for replacement of spares. So 80 ICDS 10. Normal depreciation as per income tax law 22 lakhs. Additional depreciation and plant and machinery imported and installed in December 19 has been considered while calculating depreciation has not been considered while calculating depreciation. The company is not eligible for any deduction under 35 AD, so we will do it. The land during the year, sold during the year 70 lakhs, stamp value 60 lakhs, was purchased in 1314. This was the only land available, so that they have put the profit on sale 20 lakhs. So sale value is 90 lakhs. Compute the total income and tax payable for giving reasons for each item, ignoring the MAT provision. additional point you can write, it is allowed in the year of payment.
So depreciation minus figure.
$70. Tell me, 1314.
Sir, 220, sir.
Did I read a political donation? That was in previous question. So only 80 JJ. I'll give you the conditions here so that you can just go through once. Okay. Um, Number of employees should be more than the number of employees of last day of the last year. Okay. Second condition. Okay. Salary should not exceed rupees 25,000 per month, covered under EPF. Should have been employed for 240 days or more. Okay, 150 days or more if seasonal industry. Okay, in this case they have covered everything, so I'm calculating. Okay, 15 lakhs, paid 15 lakhs as additional wages. They were per month கொடுக்கல, employed from 1/5, so all conditions fulfilled. Okay, 15 lakhs into 30%. LTCG taxable at 20% under section 112. That will be okay. Okay, 431,818. You can round it off to 431,820. Okay, this into 20%. Dividend from specified foreign company taxable at 15%, 115 BBDA. So what is the specified foreign company dividend? 12 lakhs. No expenditure can be allowed on this. So into, sorry, business income taxable at, you take it as 25%. In exam they will give you, don't worry, in exam they will give you. Okay, this also will be rounded off, don't worry. Okay, okay. This question I framed only for 115 BAB. Okay, a newly established manufacturing company which commenced operation from 1st November 2019 provides you the following details and seeks your opinion on the taxation following all specification. Advise comprehensively for the overall benefit of the company. If at all there is a question, they should have these words. That's what I felt reading through all the questions. Net profit before claiming the following expenditure. Before, okay, it is before claiming. So we will do 115 BAB because it is a new company. The normal rate is 15% there. Contribution for national lab for promotion of research, in-house skill expenditure, not in the nature of land and building, plant and machinery purchased in November used for the purpose of manufacturing, deduction eligibility under section 80IA for the qualifying unit. Apart from the above information, the company is also owning a house property which is let out from November 1st on a monthly rent of 1,20,000. The above income is not credited to the P&L, hence not included in the net profit mentioned below. I gave this because you should remember 25.168% will be for house property and interest. Interest earned on surplus fund invested, which is not included in the above profit and loss account, 3,11,000. Okay. to save time, I'm not doing in the exam format. I'm doing in 2 columns. Okay, examல தனித்தனியா போடுங்க. Sure short mark வாங்கணும் இதுக்கெல்லாம். Okay. By applying the provisions of 115 BAB னு தனியா போடுங்க. Okay. You will understand அதனால I am taking this short. Let me later add it, reduce it. First, I should have done house property. First, I should have done house property. Income wise, only way I should have gone. For November onwards, right? So, from 1st November, December, Jan, February, March, 5 months. Okay. 1,20,000 into 5. Okay. Standard deduction at the rate of 30%. So, into 30%, net net HP income is 4,20,000. other sources. Okay, interest income 3,11,000. Gross total income TIA deduction 14,72,000, which I cannot claim in the other method. Okay, total income okay. I purposefully did not give the tax rate because I'm going to give you a larger perspective of 115 BAB. I'm going to give you the larger perspective of 115 BAB. Now I will work out first tax as per 115 BAB. Okay, on business income at 15%. On business income, my dear friends, at 15% into 15% on business income. On other income, because I don't have STCG on which STT paid or LTCG, so okay, on other income at 22%. On the other two incomes, I need to calculate at 22%. Okay, at 22%. So my total will be, okay, add surcharge at 10%. Add surcharge at 10%. Okay, and HEC at 4%. Okay, and HEC at 4%. Total tax under 115 BAB. This is my total tax under section 115 BAB. Okay, I purposefully did not give you the company's tax because I want to work out and show you something. Suppose the company is in 25% tax bracket. Okay, suppose the company, obviously it's a new company, it will be in 25% bracket. Okay, turnover of 17, 18, 0, so 25% bracket. Okay, so what will happen? Its total income, because be it house property, be it everything, is in 25%. Its total income 25%. Add surcharge at 7%. Add surcharge at 7%. And HEC at 4%. Okay, and HEC at 4%. Okay, total tax 30 lakh. So your 26 lakhs is beneficial to you. Beneficial to you. Your 26 lakhs is beneficial to you. So you should go for 115. But that is not the only criteria. What about next year? Will you continue to have ATIA? Will you continue? All those things will be in practical world, that will be the key factors. But in theoretical world, only 1 year comparison, 115 BAB, but with a caution note that once the assessee opts for it, he doesn't have the right, or he doesn't have the option to withdraw from the scheme. Quickly, we are going to complete the chapter with the other small provisions, okay, but important provisions to be understood and progressed. Okay. Vamana Limited has a share capital in the form of equity shares. These shares were held as on 31st March 2018 by 4 members C, D, E, F equally. The company made losses and profit as follows: 16-17, 17-18, 18-19. The above figures have been accepted by the department. During the previous year 31/3/2018, C sold shares to A, and during the previous year ended 31/3/20, D sold shares to B. So what happens? What was C, D, E, F? So in 31/3/2018, okay, for the financial, please change it to 19. It's wrong. It is 19. Okay. During the previous year, 31st March 2019. Okay. இது கமெண்ட்லாம் போட முடியும், பட் எனக்கு பயமா இருக்கு. Okay, I'm not a tech man. Okay, 2019 மாத்திங்க please. Okay, so C sold his shares to A, so it became 75%, but still that 51 condition is fulfilled. On 31/3/2020, that condition is lost. That condition is lost. But the law is very clear that only this is for business laws, unabsorbed depreciation can be carried forward and set off. The profit of the past 2 years are as follows: 8 lakhs before charging depreciation and 15 lakhs before charging depreciation. Compute the total income of AY 2021. Workings must form part of your answer. Is 51% should continue to hold. 51% of the owners at that in the year of incurring loss should continue to own in the year in which you are proposing to set off. Okay, so first we will work out for financial year 18-19. For financial year 18-19, what happens? Okay, profit before depreciation. Profit before depreciation 8 lakhs less current year depreciation 1 lakh. Okay. Can you make one more adjustment to make the provision really working? Can you please make it as 3 lakhs instead of 1 lakh? Can you please make it as, please write it. I will also write it. Okay, current year depreciation. Okay, revised to rupees 3 lakhs from the first thing, so that it really has some purpose. Okay, right? Profit after depreciation. Okay, first current year depreciation will be provided 5 lakhs. Brought forward loss of FY 17-18, which is assessment year 18-19. Okay, is I can adjust the 5 lakhs. Okay, so total income 0. Okay, loss to be carried forward 1 lakh. However, in the financial year 1920, this loss cannot be set off. Okay, year ended 31 3 2018. Year ended 31 3 2018. I asked you to see change it to 19. Please remember. Okay, C, D, E, F, each 25%. அதோட லாஸ் தான் இந்த 1 lakh இருக்கு. Year ended 31 3 2020. Okay, C has sold it to A, B has sold it to B. Okay, it will be E, F, A, B. This will be the shares. So 50% only is continuing. Okay, each 25%. Okay, so year ended 31 loss அந்த provision நம்மளுடைய இதுலயும் நம்ம பார்த்தோம். இப்போ revision materialலையும் okay, the provision reads, because in exam you write the exact words or you write similar words, you will stand a good chance. Okay, the provision reads like this: on the last day of the previous year in which loss was incurred, and on the last day of the previous year in which loss is proposed to be set off, both should be at least 51%. So ஆனா இங்க இல்ல, இது already existing provision for companies. Now it is extended to startup also. That's all is the difference. So okay, so this loss, okay, you cannot set off that loss. That's why you changed it to 3 lakhs. But that is okay. This provision is not applicable for unabsorbed depreciation. So now for FY 1920, for financial year 1920, okay, profit before current year depreciation, profit before current year depreciation 15 lakhs. Less current year depreciation I haven't adjusted the lines. I will adjust it before posting. So 150, 1,50,000. Okay, current year depreciation 1,50,000. Okay, brought forward depreciation is 7 plus 6. Okay, brought forward depreciation 50,000. Okay, had I got that 1 lakh, I would have got it as 0, but unfortunately, I cannot bring that 1 lakh because 51% is not held by the same person. 51% not held by the same person. Okay. There were once or twice this question is asked. This time 80 ISC ஏதாவது ஒரு கம்பெனி கொடுத்து இந்த கொஸ்டின் கேட்கலாம். Okay, because that is also coming to 51%. But there are very many areas to test. Just in the question ஒரு வாட்டி பாருங்க before revision, I mean before examination, that will be more than sufficient. Okay, question number 9. Dal Limited, a domestic company, purchased its own unlisted share, buyback of shares, on 17th August 2019. The consideration for buyback amounted to 18 lakhs, which was paid on the same date. Dal Limited had received 11 lakhs for the issue of these shares 1 year back. Compute the additional income tax payable. Further, determine the interest payable, if any, payable if such a tax is paid on the credit of central government on 7th November 19. Would there be any tax implication in the hands of the shareholders? So this provision is now for listed company also. 17th August the date kutta listed company. 4th July, 7th July அப்படின்னு ஒரு ரெண்டு டேட் கொடுத்து 4th July scheme is initiated, 7th July the buyback happened. It is only taxable in the hands of the recipient. So இந்த question எப்படி வரலாம் அப்படின்னா advise the company whether to buy back. Okay, இதெல்லாம் over we are 1.5 years after that. Okay, but we don't know. Okay, so what would have been the impact on the shareholder had the company purchased the shares on 4th initiated on 4th July? What would be the impact of the shareholder if it is initiated on 7th July? So 4th July na taxable in the hands of the shareholder, 7th July na it is taxable in the hands of the company. Okay, leaving it to you. Okay, additional income tax is 20%. It has to be paid within 14 days, otherwise interest of 1%. Okay, leaving it to you. Anyhow, tomorrow morning you will have the answer. Question number 10, I answered the RTP question. Okay, question number 11. An Indian company approaches you on the treatment of exemption under section 54 EC, and I wrote it this because of the recent case laws. Okay, and also want to know 234 BC. 234 BC Rolta India case law. Idu vandu in the other case law which we were discussing. Okay, chromium, metal chromium case law. Okay, which is why I wrote this question, metal chromium and Rolta India case law. Question number 12. This is for dividend. I want to do it. A trading company declares a net profit of 16 crore 84 lakh 20,000. Net profit includes the following. Compute the tax payable and advise suitably. Dividend from Indian subsidiary company which has paid DTT. It is exempt under 1034, fully exempt. While computing 115O, I will allow it as deduction. Dividend from domestic company which is not a subsidiary. It is exempt under 1034, but while computing DTT, I cannot reduce it. Dividend from foreign subsidiary company. So foreign subsidiary nale more than 15%. SFC 15% tax, and it will be allowed as deduction while paying DTT. STCG on which STT is paid taxable at 15%. LTCG on sale of land taxable at 20%. The company proposes to declare dividend of 3 crore 90 lakhs to its shareholders. Okay, its shareholders. Let's do it. ரெண்டுமே செக்ஷன் 1034 எக்ஸம்ஷன். somebody was asking me 80M னா என்னன்னு, இதெல்லாம் நெக்ஸ்ட் இயர் 80M இருக்குங்க.
Hello.
Go ahead.
So specified foreign company where it is given for the purpose of 115
subsidiary
BBD.
ராஜா, அப்படினாலே 51% இல்லையா?
No, I'm asking that one. 26,80,000 dividend from specified foreign company.
Yes, dividend from foreign subsidiary company, so it's obviously 50%,
Okay.
right?
Okay. Okay.
So that I use the other columns to do the tax. Okay. Friends, I will use this space for doing the tax. Okay. %, 20%, 15%. Okay. Now,
Sir, LTCG is 1.14 crores.
add surcharge the rate of 7%. Okay, 7% only. Yeah, 16 crores. எவ்வளவு அது? 14. So sorry, it is at 12%. And HEC at the rate of 4%. can round it off. In exam, please round it off to 4, 58, 40, 120. Computation of dividend distribution tax under 115O. Okay, as I told you, the possibility is there. But also, it's rare because you are the last batch. Now that the provision is gone. Okay, proposed dividend. Okay, 3 crore 90 lakhs. Proposed dividend 3 crore 90 lakhs. 3 crore. Okay. Less dividend from domestic subsidiary company, less dividend from domestic subsidiary company, 27 lakh 90,000. Okay. Dividend from foreign subsidiary company, dividend from foreign subsidiary company, 26 lakh 80,000. Okay. Net dividend is 3 crore 35 lakh 30,000. 3 crore 35 lakh 30,000. DTT on gross basis. How to calculate? Okay, 3 crore 35 lakh 30,000 into 15 by 85. Okay, if this is 85, what is 15%? Okay, okay. And surcharge at the rate of 12%. In this question, okay, irrespective of this, it is 12%. Okay, and HEC at the rate of 4%. Okay. This is how dividend distribution tax is computed. For a company, it can be buyback of shares, it can be dividend distribution tax. 115 BBF is not only for companies, it is for all assessees. So it is, I'm not including it here. So it is for all assessees. Okay. 115 BAA, BAB or sure short can be in anywhere. 79 amendment and okay, maybe 115B and the Kamcha question, okay, they might come. In the case laws, that 10 years, okay, might come, okay, that software, okay, might come. And this metal and chromium might not be a full length question, might be a smaller question. And if there is a question from book profit computation, never miss that question. Go ahead and attempt it. We will definitely be right. Okay, right? At the end of the evening, at the end when you are going to bed, I want you to go to bed with full confidence that you know PGBP. Okay, you know PGBP and you can definitely answer any question in PGBP. I also want you to go to bed with the belief that capital gains is complete, a assessment of firm, assessment of company, assessment of charitable trust, assessment of business trust, all these things. We have almost completed 40 to 50 marks in our paper from various angles. From various angles, I want you to go to bed with a lot of confidence and wake up tomorrow morning to say that 8 marks of TDS we will work out. Tomorrow morning, TDS. Tomorrow evening, assessment of individuals. I am preparing the material. Tomorrow evening, I will post it. You please download it. I will also, okay, I'm working on the material, finding it difficult. Okay, day after tomorrow, exclusively a day for assessment procedures. Exclusively a day for assessment procedure where I want to talk about all the case laws, okay, in assessment procedure. If at all there is any spillover, 5th day morning, but it should not have a spillover. Okay, 5th day morning, okay, transfer pricing. 5th day evening, non-resident taxation. 6th day morning, DTAA and miscellaneous provisions. 6th day evening, BEPS and our treaties. Okay, with that we should be able to, the last 4 sessions should give us 25 marks. That's my aspiration, ambition and other things, so that the first 8 sessions will give you the additional 30-35. Together it should be easily 50. Honestly wishing to they have 60. Meet you tomorrow morning sharp at 6 o'clock. Okay, all the best. I'm available for doubts.